Lucky 7. I won! Hello and welcome to the Durham Talents channel. My name is Jesse Durham. Today we will be talking about business sales, inheritance, lottery winnings, and all other forms of windfalls, and how that can interact with the infinite banking concept as conceived and described in R. Nelson Nash's book, Becoming Your Own Banker. Welcome to the show. Let's talk about, firstly, the warehouse of wealth. Nelson would always say that money should have a home, that it should have a residence, that it should have a place where it comes to first. Now, in today's society, it's very common to have deposits directly sent to a conventional commercial bank, whether that's folks being paid weekly, monthly, whatever the case may be. Business owners putting deposits in the conventional bank and using that as the warehouse of wealth. Well, when we understand what banking is, what conventional banks are doing with the money that we deposit there, being able to loan out multiples of it to be able to earn masses, just simple volumes of interest for themselves, and there are owners of those banks, well, it's readily discernible where those dividends are going, to the owners of the banks. They're making money off of our money simply by us making deposits. So I'm here to promote the idea that you can become your own banker. So we should consider, where is our warehouse of wealth? Now, even aside from windfalls of selling a business or receiving an inheritance or any other form of a windfall where money comes to us perhaps unexpectedly, we win the lottery, whatever the case may be, I believe it would be prudent to already have a warehouse of wealth. Money should have a set, purposeful, intentional destination first. Now, if that is to be a properly structured whole life policy with a mutual company, then that's going to be a private entity that we own. So our money would be deposited first as premiums paid to one of these whole life policies like I've described, and then from there we can have access to our capital for the things that we would do otherwise to run a household or to run a business or for any investing that we do, whatever the case. And also by building eventually a system of policies that we own and control, we will then systematically expand our financial footprint to accommodate windfalls, such as the sale, the intentional, purposeful, systematic, designed sale of a business, or if we are aware of an inheritance, of course, there would be lots of reasons to have a desire to put those funds in an entity that would be tax protected, because all of the death benefit that will eventually be awarded from a policy maturing due to someone's graduation, someone's passing, is a tax-free transfer of wealth to whomever the beneficiaries are. So if we are aware of a future, and we are working towards or planning towards a future sale of a business or receiving of an inheritance, whatever the case may be, some windfall of money, it would be beneficial to have a system in place ready to be able to receive that, avoid any unnecessary taxes. And again, I'm not a tax expert, but if you have systematically built a system of policies wherein you finance the things that you do as a household or a business or as an investor, and you have space in that system to accommodate a windfall of money, wherein it will not be subject to the volatility of the market, it can have protections against litigation, for sure protection against inflation, and eventually will culminate in the transfer of a tax-free wealth. That's a beautiful thing. So considering where our warehouse of wealth is, where is your warehouse right now? Is it just A hole in the ground? Is it the mattress? Is it a coffee can? Is it a CD, an IRA, a 401k? Is it the conventional account, savings account, checking account, money market account at a conventional bank? What is your warehouse of wealth? Now, I would like to say, simply because I have mentioned winning the lottery, statistically, those chances are infinitesimal. But I know that folks like to speculate, so I'll throw that in there in this category of windfalls, because there can be legitimate and authentic windfalls, expected and unexpected. That can happen. And it is good to be prepared for those as much as we can be. And again, for those of us that are not abdicating the banking function to someone else, but we are maintaining control and ownership of the banking function in our lives, it behooves us to speak about windfalls. Now, what I would say specifically about the lottery, of course, is don't bank on winning it. You see what I did there? Don't bank on winning the lottery. Now, that's not to say that I heard sometime back someone that I personally know is a contractor, was driving down the interstate and happened upon a box of brand new power tools. They pulled over, got the debris out of the road. Obviously, it had fallen off some other vehicle, and looked for an owner, stayed in the area, drove up to the next exit, circled back around, made another loop, looking for someone that would be searching for these brand new power tools that had obviously come off of another vehicle. That person was not to be found. This was an out-of-state trip. They exhausted all their efforts to locate a stranger's tools, and ultimately ended up taking those tools for themselves. No one was to be found. They kept going on their trip on an out-of-state interstate road, and had the advantage of being able to own and use some high-quality power tools. So the chance of that happening is statistically infinitesimal, but it did happen. But I would say, when addressing banking, when addressing the infinite banking concept, banking on winning the lottery is not the place to start. Banking on inheriting something from a distant relative, again, unless that is very practical and realistic and you're aware of plans, that's not the place to start the banking journey for yourself. So it's possible, but not likely. The place to start is going to be looking at the cash flows that you already have, making sure that you don't have lazy dollars in inefficient locations, making sure that you're not abdicating the banking function to someone else, and therefore you're paying them interest on their terms and conditions. Money that will forever leave your hands that could be maintained within your own privatized banking system. Again, whether you're a household or a business owner or an investor, maintaining control over the banking function in your life, not abdicating the terms and conditions to someone else, nor paying interest dollars to someone else, or forfeiting the interest that you could have earned on your money, depending on where it is that you are currently warehousing your money. Again, if you could add one step to what it is that you're already doing and have your dollars touch base in your warehouse of wealth, in your policy that you privately own and control, and then could designate the use of that capital for the things that you're already financing in life, well, you just turned an inefficient dollar into a more efficient dollar. That same dollar can now accomplish more than one task. So if you are genuinely building a business right now, a big business, small business, doesn't matter, but you're building, running, operating a business at some level, and you have the eventual intention to sell that business, so to be able to earn an income off of that business in the meantime, but you have a plan or an intention of eventually selling that business, then I'm suggesting that you consider now what kind of system will you have in place at the time of the sale of that business to be able to accommodate that windfall. Let's walk through this scenario. If you're running a business now, You're running a business now. You pay taxes, the overhead. You know your business better than I know your business. But you're running and operating your business at whatever level and whatever capacity that you are. Receiving and paying out cash flows. So you have your expenses, you have your profits, the money is coming and going in and out of your business. If you are conventionally financing things for your business, you're doing it in one of two ways. You're either borrowing someone else's money on their terms and conditions and paying interest dollars for that. Again, at their terms and conditions. Interest dollars that are forever leaving your business, never to return. Or you're setting aside money somewhere and forfeiting the opportunity to earn on that money that you otherwise could have. Well, the other option is to practice infinite banking, wherein you do capitalize somewhere that you own and control, a properly structured whole life policy with a mutual company that pays a dividend, and you access the capital in that policy for your need for finance as a business, for your operating expenses in the here and now. And then with an intended eventual sale of that business, you can strategically, over the years, build a vacuum in your system of policies to be able to accommodate the sale of that business in the future. That way, you don't pay unnecessary taxes. Again, I'm not a tax expert, but you should be paying your taxes as you legally are required to in the here and now. And with the eventual sale of that business, there very well may obviously be some tax repercussions there. But if there's a way that we can limit taxes that we will have to pay in the future, if we could pay taxes on the seed and not the harvest, then that is very beneficial. And again, in the event that that business is sold, there will again be another transfer of that wealth. If you're selling the business to someone and receiving compensation for that, where do you put that? Where's that windfall of money going to go? Well, it could go into a system of policies that have been properly structured to be able to accommodate that windfall money. And then from there, that money is going to be premiums that have been paid to a whole life policy, and that will eventually culminate in the death benefit. Now, the death benefit of a whole life insurance policy is paid to your beneficiaries tax-free, 100% completely tax-free. So as a business owner, there are serious considerations to be made for both how you run and operate a business now, to account for the banking function in your life, to account for your need for finance in operating and running your business, but also if you intend to eventually sell, where are you going to put that money? Also, if you do legitimately expect to receive an inheritance from a family member or such, again, I don't think that's necessarily the place to start. The place to start is whatever it is that you're already doing now. If you're an employee, if you're self-employed or some specialist in an industry, if you're building a big business, 500 plus employees, if you're an investor or any mixture of these, what does your need for finance look like right now? And if you will accommodate for your need of finance right now and also get yourself coverage and protection, that's a given. We're talking about whole life policies here as our tool for finance, which also include a death benefit. Inherently, we're talking about getting a policy that you own and control that will provide for your need for finance, but also will give you the coverage and protection that you should have. Then, if you're moving through life, accounting for your need for finance and doing the things that we're going to do anyway, but now you're maintaining control and ownership over the banking function, and that does eventually, a year from now, 5 years from now, 10 years from now, if you have a legitimate expectation of receiving an inheritance, well, where are you going to put that? Where can you put that where future generations could receive that transfer of wealth again and it not have the same tax implications that it would in other areas, in other entities? And outside of these two examples of talking about selling a business, winning the lottery, we did mention that earlier, receiving an inheritance from a family member, for example, or any other windfall, if you're accumulating assets of some form, any form, whatever that asset is, I don't care if we're talking about cryptocurrencies, precious metals, commodities, businesses, anything that could be considered an asset, and there is going to be a sale of that asset either now during your lifetime or upon your graduation, where will those earnings go? And can we put those earnings somewhere that would allow for a tax-free transfer of wealth? So regardless of which kind of a windfall that we're talking about, again, if we start with the fundamental question of where do you warehouse your wealth, where do you put your money, what's the home for your money from where you can deploy it, then we can account for and accommodate all of these scenarios. And this subject really makes me think of a quote from Jim Rohn where he said, when talking to someone, what if you did inherit $1 million or some lottery winnings or what have you? He said, best you become a millionaire. Meaning he was talking about the person's development, understanding, knowledge, ability. He said, best you become a millionaire so you can keep the money. Because time and time again, let's look at professional athletes. Let's look at lottery winners or other instances where someone is instantaneously given control over a larger amount of wealth than they have maintained or used or had before. And we see readily that it is quickly lost because it's based off of the knowledge and the understanding, the stewardship of that person. Scripture puts it this way: when I was a child, I thought as a child, acted like a child, I was a child. But it says, when I became a man, I put away childish things. So Jim Rohn said, best you become a millionaire so you can keep the money. So for me, this entire discussion of windfalls and infinite banking, it comes down to, what do you do with $1 today? Outside of looking at windfall money, what is it that you do with $1 today? Is that conventionally deposited at a commercial bank? Do you put that into some qualified plan that you can't access without penalties and taxes and terms and conditions and exposure to market volatility? And what do you do with $1 today? Do you put it under a mattress where it could be stolen or burned down? What do you do with $1 today? When you're paid weekly or bi-weekly, or you as a professional earn a commission, or you as an investor make a sale, close a deal, whatever the case may be, when you as a business owner earn profits on the completion of a project, what do you do with your dollars today? Because we can't even begin to address windfall money if we can't look at what you do with $1 today. What I would promote is that you can become your own banker. You can build a system of policies over your lifetime that can eventually accommodate for 100% of your need for finance. And eventually, upon your graduation, will be a tax-free transfer of wealth to future generations. If you can look long range and decide that you're unwilling to abdicate your banking function to a third party, to someone else, then you can strategically account for your entire financial footprint with policies that you own and control. That way, your dollars today create appreciating assets that you own and control to compound over the years. And let's talk about compounding. Einstein said that compound interest is the eighth wonder of the world. He said if you understand it, you earn it, and if you don't understand it, you pay it. So compounding happens in a policy because when you pay premium dollars, that value cannot go down. So the cash values guaranteed in your policy and the eventual death benefit will neither of them devalue. They're not exposed to market volatility. It's a contract. You have a unilateral contract wherein when you pay premiums, the insurance company is guaranteeing you a certain amount of death benefit, therefore a certain amount of cash value in your policy. And you can access the cash value in that policy, your capital, your money, via a policy loan. And even when you access capital from your policy via a policy loan, it doesn't interrupt the compounding that's taking place of the premiums that you have paid. Because when the insurance company gives you that loan, it's from their general account, not from the dollars that you've already paid in premiums to your policy. So the compounding effect is not interrupted, and yet you can still access your capital. It's a beautiful thing to be able to have the best of both worlds. Capital that you can access in a known interest environment with you being in control in a private entity today for your need for finance, all while appreciating dollars are growing into the future that eventually culminate in a death benefit that will be a tax-free transfer of wealth to the ones that you love. So whether we look at one of the scenarios that I commonly refer to like a penny doubled every day, if you pull out your calculator and double a penny every day for the next 30 days, it will turn into millions of dollars. One penny doubled over the next 30 days would turn into over $5 million. I believe it's $5 million. The other example I commonly use is a tree. You know, the best time to plant a tree is 20 years ago. That way we could be enjoying fruit today. But the next best time to be able to plant a tree is today. So the beauty of not having to interrupt the compounding of your dollars while still being able to access your capital is a beautiful thing. It's the best of both worlds. That way we can account for our need for finance today and also into the future by owning an appreciating asset. And remember this, whether you're vetting this idea of infinite banking for the first time or you're already a client with a policy or multiple policies practicing, we either live or we graduate. We're either going to live or pass. Won't we be better off either way if we practice the infinite banking concept? Won't our heirs, our beneficiaries, those that we love, be better off if we practice daily the infinite banking concept? To include these windfalls that we're talking about, if you intend to pass on assets, businesses, and inheritance to others, won't we all be better off? Won't your people be better off if you account for your need for finance today and build a system of policies that you own and control? And furthermore, what if they learned from the start that they could become their own banker, that they could account for the banking function in their own lives and have an even better starting point than you and I have been able to have? I know that I was right at 30 years old when I first read Nash's book, Becoming Your Own Banker, for the first time. And since then, my wife and I have built a system of policies that we own and control that, yes, will eventually be a tax-free transfer of wealth to our children. But even more than the tools of dollars, the tools of these policies is the education and the thinking of intergenerational planning and acting. Living freely and independently, not abdicating the banking function to someone else, but accounting for our own need of finance. So the education and the thinking behind what it means to practice infinite banking as a family, it's a beautiful thing because we'll be better off either way. So this has been us addressing windfalls, winning the lottery, selling a business, receiving an inheritance. If this has been helpful to you, let me know down in the comments. And if you'd like to have a one-on-one conversation about how you could implement the infinite banking concept into your household or your business or your investing to accommodate for your need for finance, including windfalls, then you can reach me at 828-817-4223, or you can email durhamtalents@gmail.com. This has been a great pleasure for me. I look forward to our next conversation. Have a great day. Take care. Hello and welcome to the Durham Talents channel. I won! 777. I won!